Asian markets enjoyed another rally on Friday after Donald Trump hailed positive talks with Chinese President Xi Jinping. A report also indicated he had asked officials to draw up a draft bill as he eyes a potential trade deal between the two. Hong Kong jumped almost 4% at one point, while Shanghai and the yuan soared as dealers seized on the news, hoping for a breakthrough in a standoff that has rocked global equities and fueled warnings about global growth. Japanese equities bounced up with the Nikkei share average closing 2.6% firmer. Hong Kong stocks were also buoyant with the Hang Seng index jumping 3.7% at the close. On mainland China, stocks were also higher. The Shanghai Composite Index rose by 2.7%. U.S. stocks rose for a third straight session on Thursday as President Donald Trump said trade talks with China were moving along nicely, reviving hopes that the two countries can resolve their trade dispute. The Dow Jones Industrial Average rose 1.06%, the S&P 500 gained 1.05%, and the Nasdaq Composite Index added 1.75%. Let's take a look at how European and the local markets are performing. Warwick Lucas from Galileo Capital joins me in studio now. Thanks so much for your time on SABC News. Let's take a look back at what happened in October on the US stock market specifically. Around $2 trillion lost. What happened?
Okay, so it's been a season in which I think the market wants to see some kind of sustainability in earnings. So although we had specific cases like Google and Amazon, and we just had Apple last night, again disappointing on earnings. As a whole, the market actually has seen a relatively strong earnings set. But clearly what the market wants to see is some kind of sustainability coming through. In other words, that there are going to be earnings beyond the short-termism that we've seen. That has been driven substantially by tax cuts and so on. So we're getting to the end of a year in which we've got to see what's on the other side now. Okay,
and is the rest of the year looking a little bit calmer, and this volatility that we also saw there? I know you're saying it's not that hectic. Is that going to continue?
Well, I think the other factor in the very short term is midterm elections. So we want to see those out of the way, and that's not too long now. Tuesday's the D date, so we'll find out on the 7th what's actually happening there. And then the other key issue being potential trade war or otherwise between the US and China. Now we're seeing some sort of signs of potential resolution there. Will it actually amount to a row of beans or not? Well, that remains to be seen.
Also, US non-farm payroll data out today. What are we expecting?
Okay, so your typical look-through figure on that monthly data item is normally in the order of around about 160 to 180,000. In reality, it can be a very, very noisy line item, and we've often seen revisions. Well, 2 months ago, for example, we saw a revision upward by 75,000. So that's quite a number and a big percentage jump, and it can happen the other way as well. So I think it is an important data item. Unfortunately, it's an unreliable one, so people should be very careful about hanging their hat on it.
Let's come back to South Africa now. We saw the rand strengthening by around 2%. What's causing that? I'm
looking at that being substantially an emerging markets effect. Firstly, in relation to the talk coming from the White House about thawing relations between the US and China, and secondarily we're also seeing a change in government in Brazil that was predominantly business friendly as well. So between the two of them, I think it's making for some good emerging market sentiment, and that's coming through in the rand as well.
Speaking of this emerging market sentiment, we've seen President Cyril Ramaphosa over the last week or so really pushing for investment in South Africa, on the African continent, and advocating that that's a really good idea. At the Investment Summit, at the G20 Africa Summit in New York yesterday or the day before yesterday, there was also that sentiment coming out. What we're seeing from ratings agencies and from economists and analysts here is that although the messaging is good, when you look at it a little bit closer on, that's not the fuller picture.
Yeah, I think part of it is that all of those external entities, be they potential investors, rating agencies and so on, are saying, fine, well, we're hearing a more positive message from South Africa, but when it comes to action, we actually want to see some tires hit the road. One of the things that's happened in the last few years is that business, lacking confidence, substantially built up cash deposits, so short-term firepower. Now, they want to see some of that firepower actually then being turned into investment in the local economy before they'll follow through. So lead by example, I should say, is what's been looked for here.
So we heard quite a bold pronouncement that the investment strike is over. Would you say that's correct, or those businesses are still waiting for some other sign? And what is that sign to say, okay, we should start investing our cash back into the South African economy?
I think they'll certainly start putting their toes back in the water. I think they'd like to see the political temperature generally continuing to improve in this country, and I think that'll be a process of confirmation as they keep hearing the right noises.
Okay, let's take a look at some company news quickly. We'll start with African Rainbow Capital. They're up around 3%. How much does that have to do with them getting regulatory approval to acquire Time Digital Bank and launching that in South Africa soon?
Well, I think that'll be quite helpful. I think, look, broadly we're going to see quite a lot of gains across the board, what with Tencent gaining in China and so on. So there's some big gains across the JSE today. But I think it'll certainly be helpful in the case of African Rainbow, and it is quite a deeply discounted share in any case.
Let's go to mining. We saw Goldfields' share price. I'm not sure how it's looking now after that strike notice by NUM and a Section 189 notice that was issued by Goldfields. Okay,
so quite a cynical move there. The share price actually somewhat up today. And the cynicism really wanes in from the fact that, well, the mine says we're going to lay off people, we're struggling with the gold price, etc. And NUM then follows through by putting out a strike notice. Now, quite frankly, the layoff process is expensive, difficult, traumatic, etc. And then when a union says, well, then we're going to strike, and the possibility of that strike somehow going sour, etc., well, that could mean that there's a higher likelihood of the strike turning into criminal action, turning into a defendable dismissal. So hence the cynical response from the market of the share price going up.
Thanks so much for your time on SABC News. Okay. Warwick Lucas giving us an analysis of what's taking place on the markets. Time for a short break.